Norway is one of the wealthiest countries in the world. Apart from being an extremely rich nation, Norway also has a big influence on global businesses. But is that really true? And if so, why? Best known for its history of pirates, northern lights, snow sports and jaw-dropping fjords, the Scandinavian nation is making a name for itself as the only major economy in Europe where young people are getting markedly richer. This may be a slight misconception that Norway was a relatively poor country until the discovery of oil and gas in the North Sea. However, as in the 19th century, Norway's wealth was, in fact, on par or slightly above average compared to the rest of Europe at the time. But it was certainly behind its neighbors Sweden and Denmark in terms of wealth. But the situation is not the same today. How did Norway change its fortunes and become so rich? You may be thinking that just like any other oil-producing country, Norway too got rich just by overexploiting its natural resources reserves. Well, you're not correct this time. Before moving on to black gold, there are some other things which have been highly favorable for Norway which go unnoticed most of the time. One of the most important conditions which is favoring the Scandinavian country is its size. Norway is too big with a very small population. Just for your knowledge, Norway has a population of 5.3 million while the population of New York is 19 million. Norway has a huge amount of landmass, coastline and waters, but a relatively small population. And this means they earn from both land and sea, which goes a lot further. Another major thing that favors the country is its position on the globe. Norway is blessed with natural resources. Norwegians have been taking advantage of fishing for centuries thanks to the cold waters all around the country. Even to the present day, the fishing industry still plays a critical part in the local economy. Agriculture also played an important role in Norway's economy, but Norway's fortunes changed significantly upon the discovery of black gold underneath the water. In the late 1950s, very few people believed that the Norwegian continental shelf might be rich in oil and gas reserves. However, the discovery of gas at Groningen in the Netherlands in 1959 caused people to look again at the petroleum potential of the North Sea. In October 1962, Phillips Petroleum sent an application to the Norwegian authorities for exploration in the North Sea. The company wanted a license for the parts of the North Sea that were on the Norwegian territory, and that would possibly be included in the Norwegian shelf. It was at this point that the Norwegian government claimed sovereignty of large offshore areas. For the authorities, it was out of the question to hand over the whole shelf to one company. If the areas were to be opened for exploration, more companies had to participate. Later in 1963, the companies got the license to carry out preparatory exploration. The licenses included rights to perform seismic surveys, but not drilling. Even though Norway had proclaimed sovereignty of large offshore areas, some important clarifications remained on how to divide the continental shelf, primarily with Denmark and Great Britain. Agreements on dividing the continental shelf were reached in March 1965. First licenses were announced on the 13th of April 1965. The first well was drilled in the summer of 1966, but it was dry. Despite the setbacks, the Norwegian oil adventure began in 1969 with the major discovery of the Ekofisk field. The government released licenses gradually. Foreign companies dominated exploration of Norwegian oil fields in the initial phase, and were responsible for developing the country's first oil and gas fields until the formation of Statoil in 1972, which gave the state a direct interest. Over the last 40 years, petroleum activities on the Norwegian continental shelf have contributed significantly to Norway's economic growth and to the financing of the Norwegian welfare state. According to government figures, the industry has created values in excess of 12,000 billion Norwegian krone in current terms. Since production started on the Norwegian continental shelf in the early 1970s, the oil and gas sector has grown into the country's largest measured in terms of value creation, government revenues, investments and export value. If you think that's what made Norway what it is today, you certainly don't know the actual plot of the story. While oil has played a major role in the development of Norway's economy, it isn't the sole reason Norway is so well off. While the discovery of oil was purely one of chance, how the Scandinavian nation has managed and used the money generated from the oil and gas industry as the turning point for the nation's economy. This was also the main difference between Norway and the United Kingdom. Both countries found oil underneath their waters, but their policies couldn't be more different. Norway's oil and gas sector is state-owned, but the UK's is privatized. This means that society only benefits from the oil and gas revenues through taxation. While the UK is recorded to have one of the lowest corporation taxes in the world, the UK government also decreased the tax rate for oil and gas companies when the price of oil dropped. The Norwegians could afford the luxury of being patient. Their political situation was one of stability. Their leading Labour Party had been the largest one since 1927 and was the one responsible for the welfare system. On top of that, the Norwegian government's attitude towards private companies was aggressive. They only allowed a 50% ownership stake in any given well, with the rest being owned by the state itself. In 1972, Norway created an oil company entirely owned by the state, which would then give tough competition to the foreign companies. And most importantly, Norway put a limit on oil production. And what's really smart is what the Norwegians did with all that money. They not only saved it but also started investing it. As we know, many oil-producing nations overexploited their oil reserves and became completely dependent on oil. And even slight fluctuations in the prices of oil brought their economy on the brink of bankruptcy. Norway, on the other hand, had different plans. In 1990, Norway established the Government Pension Fund Global, also known as the Oil Fund, to invest the surplus revenues of the Norwegian petroleum sector. The money comes from taxes on operating companies, exploration license fees, dividends from the partly state-owned Statoil, and profits from the state's direct financial interest in some fields. The Petroleum Fund was established after a decision by the country's legislature to smooth out the disruptive effects of highly fluctuating oil prices and to counter the effects of the forthcoming decline in income, as current revenue from the petroleum sector is estimated to be at its peak period and is expected to decline in the future. The Government Pension Fund Global has invested in global financial markets, so the risk is independent from the Norwegian economy. The fund has investments in over 9,123 companies in 73 countries. On the 25th of October 2019, the fund's value reached 10,000 billion kroner, according to its official website. It also holds portfolios of real estate and fixed income investments. The fund has over $1.35 trillion in assets, making it the world's largest sovereign wealth fund. If we divide the fund by the entire population of Norway, each Norwegian has almost $250,000 invested in the stock market. The size of this fund can be estimated from the fact that it holds 1.4% of all of the stocks existing in the world. The Government Pension Fund Global is saving for future generations in Norway. One day the oil will run out, but the return on the fund will continue to benefit the Norwegian population, Norges Bank Investment Management. But obviously, many analysts are not happy with the investments of the fund and think that the fund can make even more money. But here comes the master strategy of Norway. The country doesn't just use this fund to generate a stream of income. Norway uses this as a powerful political tool. According to the Financial Times, the world's largest sovereign wealth fund opposed 6,700 company resolutions last year. As a major stakeholder in big companies, the fund has the right to participate in the board meetings of the companies, where it can vote on corporate decisions and even give suggestions. Norway's sovereign wealth fund is becoming more active in company governance. Norway's Government Pension Fund Global has the potential to influence the corporate governance market in Europe, and possibly China as well. It is also active in pushing for lower executive pay and decreasing the wage gap. For example, Norway's trillion-dollar wealth fund-backed activist shareholders attempt to force Google parent Alphabet Inc. to report openly on global fake news controversies, and the fund also backed a motion that would have forced the company to report on gender wage gaps. The fund also backed a similar proposal at Facebook to report on fake news. The Norwegian pension fund cannot invest money in companies that directly or indirectly contribute to killing, torture, deprivation of freedom or other violations of human rights in conflict situations or wars. So, every year the Norwegian Central Bank publishes a list of companies blacklisted for involvement in tobacco production, arms supply and corruption. Beyond material wealth, the oil fund also plays a part in Norway's societal wealth, with money from the fund being invested into health, education and welfare. Norway is the sixth happiest country on Earth, according to the UN's World Happiness Report for 2021. thanks to its well-funded welfare, education and health systems, making it not just one of the wealthiest countries in the world but also one of the happiest. What will happen to Norway's economy when the oil and gas run out or the demand drops? The nation's economy will definitely be in for a massive shakeup if this happens and the world moves in the direction to get greener. That's when the fund will take the steering wheel, as it will provide a cushion to the hard transition. It all depends on how well the fund is diversified and managed that will decide whether Norway will remain rich or not.